It was not the greatest day in the market today. Everything was down, it felt like. It felt like we experienced some pain, and guess what? I feel that same pain. But I believe this is just a short-term, medium-term event, has been going on for an extended period of time, and I'm going to use some technical analysis backed up with some fundamental analysis to prove this to you. If you look at this period, this sell-off, it's been going on for over a month now, since I believe February 12th. That's almost a month and a half at this point. And we've had similar periods to this period throughout the rally. We had something like this in June, which was a little bit shorter. And we had something like this from September until the election, which was a little bit longer. So this is right there in the middle. We kind of had this period of churn, of uncertainty. And then we have an extended run that is very consistent, where the market kind of corrects to the upside, because there is reason for the market to correct to the upside here. I believe this churn kind of sell-off that never gets too crazy. It's nothing like that happened in March. It's just a little bit of uncertainty in the broader market that leads to some weak hands, some profit taking, some ringing of the register, some, panic selling all at once for some sort of month. I believe that period should be coming to a close at some point. And we are receiving the fundamentals that are guiding us in that direction and are pointing us towards a continued market rally. These fundamentals are the continued dovishness from the Fed last week. We got some continued dovishness from the Fed last week, and we had one day of very strong rally. And then all of a sudden, we got a sell-off, and that kind of continued. It's just been a lot of chop, a lot of uncertainty, and not knowing particularly where to go. And I advise you to use this period to buy stocks you like and to look at stuff that should be doing well in this next period of prolonged growth for the stock market. And that stuff is not going to be the tech stuff that is at stratospheric levels. That stuff I don't think deserves to rally. Maybe a little bit. Maybe if it's significantly off its high, it recovers a little bit. But if it's a pandemic exclusive winner, this is not the period for that stock. This is the period for things like energy, infrastructure related companies, anything that's going to be doing well in the rebound. We are about to enter the rebound stock market mania. I don't know if I think mania might be a little too much of like an egregious term, but I believe another one of these, 3-ish month rallies is about to happen after we finish, whenever this happens, whether it be tomorrow, whether it be in a week from now or 2 weeks from now, whenever this churn period ends. I advise you to not get caught up in this short-term chop period and to use it to position yourself for this next rally that I believe is coming on dovishness from the Fed. Increased liquidity, that is what has brought into this market to this level. And the Fed just said, not only are we not doing it now, not only are we not going to tighten our policy now, but when we are tightening our policy, we will let you know well in advance. They said that last week, and they reiterated that today. We will let you know well in advance. And we haven't begun the process of letting you know. So that means they're continuing to be dovish now, and they're going to continue to be dovish into the future. We also got a massive stimulus package, 1.9 trillion, and something that I don't think is getting enough attention today, even if you look at things like Caterpillar, which I have, maybe liked a little too early, but I bought at the bottom on infrastructure theories. And here we are now talking about a $3 trillion infrastructure package, which is another way of saying $3 trillion stimulus package, which is more encompassing of economic recovery than any of the stimulus packages we've seen. It targets jobs and getting people back into jobs. If we get something like that, expect the unemployment rate to fall significantly in the next year or so, and for us to meet the Fed's goal and expectation of being at full employment next year. With all of these forces, with continued dovishness, with possibly more stimulus, and with one more thing that we've talked plenty about on this channel, inflation, which is a lift all boats event for stocks, I believe the market continues rallying from here. And this chop that we are experiencing is simply a setup for the next section of the rally But this next section of the rally will not look like the two previous sections of the rally where you could throw a dart at any tech stock and see it do well. You can't do that here. Here, you have to look at recovery names. And the fantastic thing about these recovery names is a lot of them have not just been depressed since the coronavirus pandemic, but have been depressed for the last 5 years. So they are presenting good, well pricing based on the previous prices before the pandemic began, then sold off significantly once the pandemic occurred, haven't recovered, are highly in line and correlated with inflation. So expect them to get to post-pandemic levels or higher than pre-pandemic levels. And they've just got added gains of stimulus, all these kinds of things, record high savings rates, summer, the lifting of a lockdown and pent up demand, all driving forces behind these very well priced stocks. So put some attention there. I'm not saying sell all tech. I am primarily a tech investor. I'm a tech founder. I have my own tech business. I believe in tech, but a lot of tech stock prices are very high. And I'm telling you this from someone who understands the significance of cash flow and how that actually is the main determinant in the valuation of a business. So focus on that. Make sure your cash flow is there in the tech stocks you like, either having it now or having some enormous and total addressable market that it's like a revolutionary change like CRISPR. That should be your tech exposure. Cash flow tech or revolutionary tech. I don't like any of this highly competitive market, fraction cash flow valuation. None of that. Get rid of that. That is going to become, if it isn't already, a very fatigued and tired area of the market. And I would advise you to sell that if you have that and look for something like energy, which should do well once the economy does well. Once we've got all these infrastructure or some infrastructure projects working, big trucks, all this kind of stuff working, consuming energy, raising the price of energy. I know there's a sell-off right now. This is short term. This is Europe locking down. Play the long game. Play the recovery. We are now setting up for the recovery stocks to do well. This churn period is like the two previous churn periods we've seen, and we are setting up for the recovery stocks to do well. So get some exposure. And until next time, peace out.